And I think we're going to see something similar this time around. And I really anticipate that by 2024, so 2 years out, maybe two and a half, I think we're going to see, record highs in both the metals.
So it seems like what you're saying is the precious metals are acting stronger this time around. And I know we're at least very much seeing that in gold, where if you compare gold to the general equity market, I mean, the equity markets are down significantly for the year and gold is just down slightly.
It is. And it's hard to make the case that, he who loses least wins. But that's the case at this juncture. And I do believe, like in 2008, you will see a slingshot rebound where you see both the metals take off and regain some traction. And then once new buying occurs, then we will see the metals start to make new highs. Will that happen by the end of this year? I don't know. I feel strongly that by 2023, we will be seeing new highs in gold as a minimum, silver perhaps. But at the end game, nothing outperforms silver. Will it happen this time or not? We'll see. What I do know is that the best study done on it was called Silver, the Restless Metal. Professor Jastrom, I've mentioned before, Elijah, and he did the golden constant. He looked at gold based on commodities, and it did best in a deflation. And he wondered what silver did, so he looked at it under those same conditions, and he determined that silver does sometimes well in deflation, sometimes not so well in deflation, but nothing beats it in an inflation. Now, that book is several years old, published years ago, doesn't guarantee the future, but I certainly wouldn't be a seller at silver here. And one more comment on silver is that on the wholesale side, it's getting pretty tight. Now, I don't talk to every wholesaler and every refiner out there throughout Europe and the major dealers in the United States, but I still have a pretty good handle on it. And the market's price is not really reflective of how difficult it is to get metal in size. And last comment is they're moving physical silver, which I mean the commercial bars, from this continent to Europe. That doesn't take place unless there's a big need or demand for it, because shipping silver, as you know, work with Miles Franklin, is not cheap. I mean, a bar weighs around 70 pounds. So to ship a massive amount of those from across the ocean, that doesn't take place all the time. Usually what's in London stays in London, and what's in New York stays in New York, and they'll paper trade back and forth. But if you need the physical and you got to put it on a boat and ship it, it's saying something. So let me finish there.
Definitely. It does seem like, I mean, ever since the COVID crisis, really, we have seen a drawdown in supply. Do you see that? How do you see that playing out going forward if we do see a bottoming come in the next couple months for precious metals and then it take off again?
Well, that's what I see, but it may be wishful thinking. I mean, I don't think the metals story is over by a long, long shot. I think there's a lot more to the story. As I've said many times in broken record style, 90% of the move comes in the last 10% of the time. And I think we're going to see something similar this time around. And I really anticipate that by 2024, so 2 years out, maybe two and a half, I think we're going to see, record highs in both the metals, and a lot of people that will be joining the movement, the idea that, stock's bad, gold good. And of course, that is not in the consciousness of most investors at this point in time, but it will happen in my studied view. And I think hard to say, I think before the end of this year, you're going to see a lot more volume in the gold and silver markets than you have now.
Now, in your perspective, what should be people's strategies when it comes to buying at this point? Because we have seen quite a bit of a fall right now. Some people are expecting precious metals to fall lower, but other people are saying, take advantage of this dip here. So your perspective on that?
Well, there's several ways to approach it. And the main thing is to have a plan and stick to your plan. It's if you have a plan of dollar cost averaging, for example, and I'm going to buy precious metals for the next 3 years, and I'm going to buy it at $100 a month for the next 3 years, stick to your plan. So when the metals get crashed, you're buying a lot more metal for that $100 than you are if the price are high. But in a bull market, it's a good weighted dollar cost average and get a good price over time, and it takes a lot of stress. So that's number one. The other one, of course, is what people want to do, and that is to pick an exact bottom, which is nearly impossible. And the problem is the psychology that goes into it. When you say that's the bottom and you buy, and then you find out it's gone even lower, then you're upset with yourself. You should have waited, and you're hesitant to buy more. So strategy there, really, what I've done, and it seems to work well, is I make certain that the bottom is in. So let's say, for an example, silver bottoms at 1788 a week from Tuesday. And that's the low. And then it comes back up to, and the trades are below 19 for a matter of weeks. I would look at the chart and I would make silver prove itself to me, which means I'd say, okay, I'd draw a horizontal line and I would say, when silver gets above 1880, this is based on, this is based on the future. And then when it gets above 1880, it has to stay there for 3 days in a row. Must be consecutive days, and it must be on higher than average volume. And if that occurs, then I can go ahead and buy silver. Well, David, you could have bought it at 1788. First of all, to think that you can buy it at that low is almost ridiculous, because the way the futures market works is when it hit that theoretical price, that theoretical spike low, there might have been 2 or 3 futures contracts that were bought at that price, and then it starts to move up, and the next bid offer spread is at 18. And that's the way markets actually work. And because of that fact, you cannot get these unless you just pure luck getting a low. So you want to buy within the buying range, and you want to sell in the selling range. I would say right now, Elijah, anyone that's bought at a 28 or whatever, you're feeling some pain. I understand that, but I think in the longer term, you're going to be fine. But if you're new or you want to average down, I would say anything under 20 in silver is a bargain. And again, you asked me 2 months out. I think 2 months out, we will be in a position where the metals prices look better. My only concern is that 2 months out, we might see one more, big move by the Fed. Maybe they're fed up with themselves and they will raise interest rates, let's say 1%. If they did that, the market would react as it is now. Gold and silver would get hammered. You might see another big push down. But in either case, I don't see these push downs being long in duration. That's the whole point. And if your plan is, I'm happy buying under $20 silver. I know I'm being a little bit long-winded, but I'll just give you a real quick example. When we had the last big smash, March of 2020, I had plenty of cash on the sidelines. Now, I wasn't planning on the gold-silver ratio getting to 125. So I put a pretty substantial order in for physical silver the day before it hit the low of, I think, around $12. And I believe the day before it was somewhere around 14. When it went down another $2 or thereabouts, I called up my dealer and said, well, if I'd waited till today, how much money would I have saved? And of course, on the paper market, it would have been $2, obviously. But in the physical market for 100-ounce bars, the one I had committed to, I'd only save about 35 cents. So that shows you that the premium basically reacts to these market conditions when you're dealing in the physical realm. And having said all that, you could have bought it on paper. I did that in the 2008 crisis. When the 2008 crisis hit and eBay was selling silver at $13 an ounce, I called up a friend that works in the minting industry, and I bought 1,000-ounce bars and had them minted into 1/2 ounce rounds. In fact, I've shown them, I think, on your show before. So my net cost with the cost of the die, the artwork, the transportation, and the labor turned it out to be like $10 silver. But I have the Indian on the obverse and the Silver-Investor, my old website, on the reverse. And it was a lot smarter to do that. I was thinking of selling them on my site, but I didn't really want to get the reputation as being a metals dealer, because I'm not. I write a financial newsletter. So back to you.